Okay, hi everybody. My name is Justin. I'm the CTO at Elea Labs. We have a little startup in Switzerland, in Bar. And today I want to talk a little bit about fundraising. So I didn't realize it, but people are actually interested in money. Don't know why, but you know, especially in the case of startups, you need money, and so a lot of people are trying to fundraise in different ways. And so, yeah, basically we did quite a bit of work in trying to understand how you can properly fundraise in a compliant way. And we want to do that using blockchain technology, of course, because there are a lot of advantages to that. And then we combine the legal concept or the financial concept of a derivative with that. And so we'll talk just a little bit about that. Oh, and my talk won't involve any math, so don't let the graphics scare you. It's just a little math joke. That's a derivative. Okay, so I want to start by providing just a little context so we can help or better understand what's going on. So let's imagine that we have a small startup company, and that startup company has a real estate project, right? And they want to optimize how you transfer real estate title, right? And you want to optimize the value of real estate title. So this company wants to create an open global standard and so on. So let's just imagine, right? So that's cool. Now the first thing that we need to do is, after we have our concept, is we need to probably raise some money so we can pay salaries. So we need to finance this project. So how do we finance a project like this? Well, traditionally, you would sell equity in the company. You would sell shares in the company. And this is kind of a paper-intensive process, a lawyer-intensive process. And the reality now is that most people are looking to buy tokens, even though they may not really know what a token is. And yeah, I mean, I think even a lot of the people offering tokens don't really know what a token is. So the first question is, what is a token? So let me grossly oversimplify this, given that we only have about 25 minutes. It's a term for an entry in a ledger, and it represents something, right? So Ragnar talked a little bit about this already. The important thing here is that when you talk about a token requires trust, full trust. So you have to trust the issuer of the token, so who is actually offering this thing, and you need to trust the jurisdiction. So you have to trust the legal system that the issuer of the token is actually in. That's super important, because if the legal system isn't there to back you up, then you have nothing. It's really no different than offering shares. And then importantly here, you have to trust the underlying technology. So this is a big new piece of the puzzle that's been added, is technology. So no longer is it just a paper share certificate. You're actually using a pretty complex piece of machinery, let's say, when we start talking about blockchains. And there are lots and lots of failure points in these systems, and they should all still be considered experimental. So why should we use a token? Like I said, you know, in this example of a company that wants to issue a token, now if you know what a token is, you should also understand why you should be using a token in the first place. I think, to make a really long story short, it's quite easy to use. So you know, people now, if you, like young people especially, if they think about investing, are they going to figure out how to go to a stockbroker? Are they going to call the stockbroker on the phone? Are they going to try to figure out how to use a stock exchange? All of these things are kind of labor-intensive, complex, slow. It's not what people are used to now. We're used to using mobile phones. So we want a process for investing that is easy and simple. And so when we use software to invest, then we can make it easy and simple. So a really cool thing about using a token is that the cost to store it and the cost to trade it is really low. So you don't need a vault with the share certificates in it. You don't need a safety deposit box. You don't need armed guards when you're moving cash around because you're using cryptocurrency. So we're reducing or eliminating a lot of the overhead that comes along with the existing system. Something that a lot of people don't even think about is the execution and settlement of assets that are transacted. And here, again, we don't even think about it really. It's all happening in real time. So we won't go too far into this because it's a little bit out of scope. There's a huge amount that's out of scope. But something that's really important and maybe a little bit easier to talk about is leaving an audit trail. So an audit trail is really important when we deal with financial securities or securities in general because we want to eliminate or reduce fraud. And so when we use a token with the blockchain, it's really easy to track the movements of these things, and it's quite easy then to prove that certain things have happened or not happened, which is not really possible in any other system. So another really important thing when we're talking about tokens is discovery. So, you know, when we talk about like CDOs, like collateralized debt obligations and things like that, like more exotic financial instruments, you know, who in here was betting against the housing collapse in 2008? You know, nobody, because you couldn't really buy these instruments that would allow you to make those bets, right? All of these instruments were available to only sort of professional investors at investment banks. But what we can do with tokens is we can, again, simplify these instruments and make them available to anybody. And then, I mean, again, once it's digitized and you have a platform available to view these things, you can just do a Google search or something and find the securities you're interested in. So you can really discover new assets quickly and easily. And what we found is that there's an important concept here, and that's the legal concept. And, you know, also a lot of our research and work was done in Switzerland, so it's coming from this context of being in Switzerland. So at least in Switzerland, you can quite easily create and offer a token that fits as a derivative. So if you create a derivative product, then you can legally offer that as a token to the Swiss investing public, which is pretty nice. Oh, I already talked a little bit about this, but why a derivative? So in general, you have fewer rules in place. So in a lot of jurisdictions, you're gonna find that there are specific rules about how you can actually reassign shares and things like this. So when you update a share registry, how you update that share registry, in a lot of cases, this is already defined for you. So if you are using a derivative, then you're a little more open to decide how things move and how things change hands. And you can also customize the benefits that you inherit using a derivative. So if you are using a token to directly represent equity, for example, in that case, you are inheriting all of the rights and benefits and so on that come with the underlying asset, that come with the equity. And in some cases, this is really problematic. It becomes really difficult to reconcile the ease of transition, the ease of trade, of transaction and settlement in the token world with the existing procedures of trade and transfer in the legal world. So it's important to be able to customize these benefits. So we've got an example token here. And what is a token? A token is really just a stack of legal documents, right? It's really just a contractual right or contractual obligation. And so this is a description of an example token. So what we're looking at here is a participation right. And so what is a participation right? A participation right means that you can get involved in voting on company issues. So if you're a token holder then, or a token owner, you may actually be able to vote on issues that the company presents to shareholders, or would traditionally present to shareholders. You can also have the right to things like dividends. So when the board decides to pay out a dividend to shareholders, what we can do when we use a token is we can allow the token holders or the token owners to actually receive that dividend in the form of cryptocurrency. So what we're doing is we're eliminating a huge amount of paperwork, a huge amount of, hiring consultants and trying to do research to discover who the shareholders actually are. If we're using this technology and this system, then we can eliminate all of that overhead, which is really nice. So these are two pieces of the puzzle, but there's actually a third component that's missing. So you have to have the technology, so the blockchain that you're actually issuing the token on. You have to have the legal concept that fits. And so if we consider this to be the derivative, then that works, I think. But then there's a key missing piece. And that missing piece of the puzzle is, it's essentially the user interface. So how do we access and make use of this whole thing, right? The blockchain by itself, for most people, unless you're a programmer, this is pretty tough to use. So what we're talking about here is, we are talking about a platform where normal people, business people, can actually access and use and set these rules and so on. So this thing doesn't really exist, or it didn't really exist. But we imagined that there would be some important features or some important sort of concepts that we would need to address with such a platform. So first and foremost is compliance. So everything we do in business is regulated, at least in most developed countries or developed jurisdictions. So we need to make sure that whatever it is that we build, we can be compliant, and we can be sort of universally compliant. So that's an important consideration. Another really important one is the security of the data involved in this system or in this platform. So who is actually contributing to the fundraising event? Their personal data, that has to be protected, right? That is really critical. And then the funds that are actually raised. So when we do a fundraising event through a platform like this, people are going to be contributing in cryptocurrency, and that means that you as the issuer are going to be receiving cryptocurrency. And there have been a large number of kind of high-scale attacks. Excuse me, this is a huge attack surface. I mean, you basically become a jackpot. And so people are going to come after you when you do a fundraise like this. And in a lot of cases, if you're not very careful, it's easy to lose the funds that you raise. And then you have to go and write a Medium article with your tail between your legs saying, sorry, we lost 40 million, and now we're shutting down operations. Or they're just running off to the beach with your money. But I don't know. I won't comment on that. But the security of that is really important. So what we really have to do is take a hard line on that and not make any compromises on the security of the funds raised. We have to include the possibility for dividend and reward mechanisms. So maybe you want to create a new token in the future to give to your existing contributors, things like that. So we need to be able to anticipate these needs in the future. We also think that this is kind of the future of how we will model relationships between contributors, or what we used to call investors, I'm now calling contributors. But modeling this relationship between investor and issuer, or contributor and issuer. And I mean, this is not a one-way relationship. So what we've seen today is, in most sort of ICOs, or whatever you call them, it's sort of a one-way relationship. So the people send money to the firm, and then the firm just says thanks and then walks away. But that's not really how the contributors see the relationship. The contributors see the relationship as if they are shareholders. So yeah, I think this also has an impact on how things will be regulated now and in the near future. But these expectations, I think, also we need to take into account. So we need to be able to let these two parties communicate to each other. So the firm needs to be able to communicate its results and its performance to the investor, and then the investor needs to be able to provide their feedback in a constructive and sort of structured way. Because if you're an issuer of a security and then your investors get angry with you for some reason or another, or they're concerned or scared, you don't really want them going to Twitter. You want them to communicate with you directly. And yeah, so that's an important feature, is this two-way communication. Voting, of course, like I already talked about, this might also be considered a form of communication. And the important thing about voting when we talk about systems like this or platforms like this is that we're not really looking for, I mean, it depends on the level of, I guess, how adversarial your relationship is with your investors and what your requirements really are for voting. But when we start working with cryptocurrencies and with tokens, we have the option to have really strong voting systems in place for corporate issues. We also want to consider scalability. So we don't necessarily want this thing to be restricted to small startups that just want to have 100 contributors. Maybe there's a large firm, like maybe there's IBM or something, they have a larger project and they want to involve thousands or hundreds of thousands of people from around the world. So on a technology level, we want this thing to be able to scale. And then another really important consideration is the sale or the dissolution of the firm and other end-of-life considerations. So how does this affect the contributor or the investor? What happens to the token when the company dies, right? So these are really sort of challenging questions that haven't really been answered yet. So the example I gave of the company at the beginning is actually our company, Elea Labs. And so we said, okay, well, to do our fundraising, these are kind of the requirements. And the reality is that nothing out there was suitable or met our requirements. And so, if that's the case, then you just have to build it yourself. So we built what I call the crypto asset issuance system, or the case. It's not a very clever name, I admit, but I think it's descriptive, and that's the most important thing. So it really does include features that address the issues and concerns that I mentioned. Most notably, you can perform compliance tasks. You can do your KYC AML using this platform. It supports corporate controls, so multi-signature transactions. When you actually bring cryptocurrency in during a fundraising event, that goes to a multi-signature Bitcoin wallet. So, when it comes down to which cryptocurrency would you trust with your life savings, I think in most cases the answer should be Bitcoin. And so the same is true when your company is fundraising. You want all of that cryptocurrency, whatever happens to be that's contributed, to be turned into Bitcoin so that it's at least going to be there tomorrow. And so we have this set up so that you can perform normal multi-signature ceremonies like you would with officers of the company, who have oversight over bank accounts and signing power. Another really important edge case is managing refund orders. So you'll have a lot of people that don't pass your compliance checks, and so you'll need to process refunds and things like that. And we had to include two-factor authentication for everything, of course. And you want to accept popular cryptocurrencies. The other important consideration is that this thing is, it's basically a hosted solution. So where the data lives is sort of on the issuer's hardware. And so that's an important consideration when you contribute to an event. When the issuer is using a system or a platform like this, you need to really consider the jurisdiction that they're operating in and really understand where that data is living, because the jurisdiction will have different rules that apply to how they can actually manage your data. So in our case, the choice was easy. We just keep it in Switzerland. That way, yeah, we can build the most trust with people that want to use the system. So we also said, one of the key objectives here is to let normal people participate. So we said one of the things that has to happen is we have to build a mobile wallet. And that mobile wallet needs to be set up so that it's absolutely streamlined, so that you don't need to have any technical knowledge or experience or understanding to get involved in these events. So if we want normal people to become engaged in these fundraising events, then and be a part of investing in the future, we need to make it simple for them. So the easiest way to do that and to control for all the little technical pieces is to offer our own mobile wallet that actually works together with the case. This is also important because the mobile wallet includes a peer-to-peer trading feature. And it's really, really important to be able to trade peer-to-peer when you're dealing with securities, because to my knowledge, there are no cryptocurrency exchanges in the world today that are licensed or authorized to trade securities. So when we start issuing securities through this platform, people wouldn't have a way to trade if they're depending or reliant on custodial systems. So we never want to give our money or our assets to a third party to take delivery of those. That's really dangerous. We want to be able to hold our assets for ourselves for all kinds of reasons. And I mean, we don't see this as the end-all be-all of the system. Of course, there is a need for custodial exchanges for people that are into high-frequency trading and for people that want to exchange into fiat currencies and things like that. And then, I guess to that point, we use stellar lumens actually as an exit path off of the platform. So if you get tired of trading between, crypto assets, or tokens is what they're generally called, on this platform, you can exit the platform and exit the system by converting into stellar lumens and then selling those stellar lumens for whatever, for Bitcoin, for Monero, for euros. So if you had to ask, this is too much, I'm drowning in information, hopefully you're not, but if you had to ask for a sound bite, what is a simple way of saying what this thing is? It's a decentralized stock exchange. So what we're doing is we're allowing the existing system of capital markets to become peer-to-peer and decentralized. So what I mean by peer-to-peer is the firm is one peer and the investor is another peer. And we remove all of the other little pieces that are surrounding this, mainly because they're not required. But there are certain vestigial elements that are required, for user interaction and for control that we have to add back in. And that's what this platform really is. So this platform is an interface, right? But it's an interface to a system that allows just these two parties to interact together. But it does not cut out the compliance side of things, right? So it's designed to respect the compliance side of things. So here's just a little graphic, a demo of what this wallet would actually look like. We use a swipe to trade feature. But the idea is that it's simple and easy enough where anybody can use this thing, and all you'll need to do in the future to actually start investing in startups is you'll need to go to their website. You'll need to add some personal details and maybe add a credit card number or perform a bank transfer or something like this, or just send cryptocurrency. And then magically, once the fundraising period is over, you'll receive the appropriate amount of tokens. And all of the background stuff becomes magic to people in the future because they don't need to know about crypto finance, they don't need to know about blockchains, they don't need to know about distributed systems. And here is really where the future happens, I think. So if you have any questions, feel free to email me or tweet at me. You can check out more. We have kind of a marketing webpage for the case, for the crypto asset issuance system. And if you want to license it, we actually have a partner, the National Telecom of Switzerland. They actually handle the licensing for this thing. So thank you so much.